Hi guys, welcome to Investing with JYK, and today I'll talk about, well, it's mostly an admission of what I got wrong with predicting Tesla's Q2 numbers. Um, Couple of things. One is that I was not expecting Model 3 to um, turn in a positive gross margin. That seems to have happened. I still haven't figured out exactly how much money they made. I run some numbers. This turns out to be like 8,000 per car, but that doesn't make sense because that is already up about 15%. So I'll have to see what is missing in my model. The other thing is I missed out mostly on. I did not think about the way the payment system works. Yes, it is true that all the payables is probably already paid by Tesla to the suppliers, but since the production is back-end loaded, most of the borrowing for the parts happens at the back end of the quarter of Q2. So a lot of the bills are still not due yet. So if you compare the number here, you can see. Let's try to figure out how they. Let's just get down here to compare exactly what is going on with their cash situation. You can see that here. Maybe I can make it slightly bigger. Yes. Okay. So here you are. And let's just make them go to the same line, same line, same line. Yeah, it's about the same line. Okay. You can see cash actually only went down 400 million. So what exactly is going on? Restricted cash didn't change. Account receivables actually went down, so they have less bill to collect. So they've always been fairly good at collecting their bills. So in this case, that's going down as well. And their inventory increased by 800 million, right? So inventory went up 800 million. Cash went down 400 million. So there's a 400 million shortfall somewhere. And the other thing is, if you look at I'm just looking at the working capital, right? So that's the working capital. Working capital has gone down. Well, sorry, working capital has gone up, but most of that is in the inventory, which went up by 800, around 800 million. And then you got a reduction in cash, which is 400 million. So that's why the whole thing kind of went up by like 500. Well, in this case, 300 million. There was some other changes somewhere. And if you look at liabilities, the current liability is actually much bigger. Now it's 9.1 billion. It used to be 8.6 billion. So basically, they borrowed more money somewhere, and that's $500 million in difference. So they increased $500 million in debt somewhere, and part of that is accounts payable. So $400 million additional accounts payable. And let's think about how much that is, right? So 400 million, 123 divided by the number of, let's assuming they made most of their cars in the back half of the quarter. So instead of 1,800, maybe you're looking at like, instead of 9, you may be looking at 14K. So that is $28,000. Maybe $28,000 per yeah, per car in terms of parts that they borrowed from their suppliers. And the other part that is changing is suddenly you got this number that has also increased by a non-trivial amount. It's about $100 million, and these kind of stayed similar. So that's one part. And the other thing is, if you look at long-term debt, actually went up by about $1 billion, $800 million, and so that I think explains the cash. So if you think about what happened is inventory increased by a bit using cash, and then accounts payable increased providing cash. That's 400 million. So here's you got the increase is 800 million. So they spent 800 million to beef up the inventory. They got 400 million out in accounts payable, and then they got about here's 800 million. So 1.2 billion minus 3 minus 800 million. So that's the shortfall of 400 million. And that's basically how much it went down by. So I was assuming that they would have to, like, I was assuming both payable wouldn't increase and the long-term debt wouldn't increase, but both of these happened. So yes, they got more cash, and they're now a little bit more leveraged. And if you look at cash flow statement, paints a very similar picture. You got, ooh, can I make it into, yes. So you got a loss, which is similar in size. Well, actually, you could just look at this, right? Loss similar in size, and then you have depreciation, which is similar in size, because they only set up the tent late in the quarter. And more stock-based compensation. So they issue about $200 million worth of stock every quarter, so that's quite crazy, but whatever. So the net, and then here, change in operating assets. So basically, their operating asset went down a bit more, so about $160 million. So that helped, because if operating asset remained steady, then in this case they would have a negative, quite negative cash flow. So that would be like negative $300 million. But in this case, because of this number, their operating cash flow is not as bad. And if you go down, you can see CapEx clearly was going down. It was not as intense, and the others kind of pointless. And then there was cost somewhere here, I'd assume. It's for firing all the people that they fired, like 4,000 people. And then they issued some more debt, $244 million in debt. And then, yeah, and then here there's some more debt that they took on from the warehouse agreement, $140 million. So yeah, so their liability, both of these will increase liability, by the way. So their overall free cash flow is pretty negative, but net cash only went down by 400 million instead of what used to be close to $1 billion, or 3/4 of a billion. So yes, in terms of income, well, it was better than before, because the gross margin went up drastically on M3, because now you have the reason it will go up, I think, is because you have the same line, so same depreciation cost. same workers, you hire them for same amount of time, but you produce more cars, so each car's cost goes down, but each car has its own variable cost as well, which is going to be the parts and electricity or whatever, and maybe some selling expenses and whatnot. So that would be the same for M3 no matter how many you produce, but there's a variable cost, there's a amortized fixed cost, which is based on the asset that is used to produce these, and then also the hours taken by the hours paid to the assembly workers. So I still have to figure out exactly how much money they're making per Model 3. They don't discuss that, but yeah, it is better than I expected. Is it? I'm still shorted, but I started having my doubts since Sandy Monroe started talking about the 30% potential gross margin. So yeah, so that is the takeaway I have. I might dig into exactly how much money they're making per Model 3 and how much do I project them to make in Q3 per Model 3. And the other thing that we should pay attention to is Tesla. Well, Elon Musk said they will break even next quarter at least. So in order to break even next quarter, they should, well, in the operating line, well, here they should be able to cover this loss, which is $700 million. But out of that, they have some restructuring charges, which was probably not insignificant. So maybe this is only 600 million. So in order to get 600 million, they are going to the only thing that's changing is they're probably going to make more M3s, and they currently make 18K, and they claim they're going to make 50K to 55K. So let's say 55K minus 18 something, I don't know. So 37,000 additional cars, and with these 37,000 additional cars, they have to make up the 700 million. So 700 million. So each additional car, so we're not talking about salary for assembly workers, we're not talking about depreciation, these are already paid. So once these are taken out, they should be able to make 19K dollars per car in order to cover that shortfall. And if we take Monroe's 30% as its face value, then essentially they need to be making 30% on these additional cars, with a $63,000 average selling price, which is potentially doable. So let's see, but that will get them to zero. It wouldn't get them into wild profitability. And the other thing that I was thinking, what was I thinking? I forgot. But yeah, so that's the stuff that I understood from reading Tesla's numbers for Q2, and I got it wrong with the predictions. So yeah, the stock went up like 8, 9, 10%, I think, after hours. So we'll see what happens. I'm still short. My cost base is around 300. And that's it for today. See you next time.